You don't come and announce a plan of expansion in the middle of the market hour, and then if the stock collapses by 20%, you withdraw it. This is, I mean, for investors, they've lost 20% yesterday, and now the stock may be bouncing back. But I just want to understand that what was the thinking behind this line of communication, and if they're so certain that they want to be in the tire space because that is a logical diversification for them according to their board, then why have they decided to withdraw it back? Stock market performance cannot be a reason for any management, any promoter, any company to decide what they want to do with their corporate policy. Stock market is a function of sentiment in the short term, and that should not persuade or dissuade anyone to take corporate decisions. That's my limited view. That if they are certain, sure, if the numbers are matching up, if they are confident that they can do a better job than what MRF, CEAT and Apollo are doing, then might as well. It's an opportunity. If the stock collapses 20%, that does not mean that you just come out and say, look, sorry, we got it wrong and we would like to change our board decision of diversification because markets have not liked it. That is what is amazing. We were talking to the management. Hopefully some of these questions would be answered. The other mystery for me has been, or for us has been rather, that at a time when we are in this acute slowdown, why are certain categories are growing in this rather slowdown period? Paints as a category, apparel as a category, select apparel categories, what Pidilite has reported, the kind of same store sales growth number what Aditya Birla Retail or Westside or DMart has reported. So if the Indian consumer is slowing down, then why is there uptick in same store sales? Is this an indication that the Indian consumer is consuming, but they're consuming different product categories? Is this also an indication that we should not look at the consumer demand from the prism of soap, shampoo and oral care products, because the Indian consumer is now migrating into different categories. So the consumption is growing, but the categories are changing. That's something which we want to discuss with Milind Sarwate. He is founder and CEO with the Increate Value Advisors, and then we got Harish Bijoor. He's CEO with Harish Bijoor Consultants. Gentlemen, good morning. Thank you for joining us. Harish, I guess my introduction was must be the question in itself, something which you argued and we've discussed and we've debated, that don't look at Indian consumer from the prism of soap, shampoo and oral care categories. Those are categories which are mature categories, and those are not the yardsticks of how Indian consumer is doing. Do you think the current earnings season is only an vindication of a thought which you, in a sense, shared with us a couple of months ago?
Yes, I think so. Because if you really look at consumption, it's no longer a prism. It's a much broad spectrum orientation of types of products that people are buying. There are two types of categories that we typically discuss. One is a needs and wants category, and the other is the desires and aspirations category. The needs and wants category somehow in a slowdown during a recession just not touched. Because, grocery items, stuff that I'd like to eat, stuff that I'd like to possess of small value, I would never compromise. So overall, definitely the consumer mood has soured, and that's due to the growth rates that we talk about, but it hasn't curdled yet. The curdling has actually happened in higher ticket items like auto. And the worry is what happens in auto has a habit of cascading into lesser ticket items. And I think if that is timid, then we'll be back on track.
Milind, that's really the question which got us scratching our head. And I want to pick up company by company. First, let's pick out a Dabur and a Bata. When we're talking about consumption slowdown, some of the mall footfalls actually reducing, how is it that these companies have managed to beat street estimates when it comes to their earnings? Is it exactly what Harish was saying about smaller ticket size, essential products, which one would continue to buy irrespective of a slowdown, or the feel-good factor completely being a miss?
I think Harish is bang on. There is a preference for products. There is a preference for products which are relatively lower priced. I would also add one more angle to this, that in this era of a VUCA situation, volatility, uncertainty, etc., I feel consumers are also looking for a short-term gratification, and whatever is easily available, whichever products are able to satisfy them in the short run, I feel those products are being consumed more. It is supported by the fact that consumption as a percentage has gone up significantly by about 8 percentage points over the past few years. Household indebtedness has gone up, which means people are looking for short-term gratification as opposed to the classical Indian middle class way of saving a lot and always planning for the future. I feel apparel is clearly one category which is relatively lower cost. At the same time, it gratifies, doesn't create a long-term commitment for you. I feel the next generation, including the Gen Zs, are more about here and now, short-term, enjoy the present, let us look at the future later on, that kind of a thing. And I feel this pattern is going to be reflected in the consumption all over, including the digital markets which are booming separately.
Harish, one pattern which I've observed over the years in consumption is that when there is a slowdown, the slowdown prompts some degree of downtrading. Do you think we witnessed that with what DMart has reported with their sales, or what Asian Paints has reported with their sales? Right now we are in a process where the downtrading has started, and in next quarter the downtrading will also become negative.
Could point of worry in certain categories. Let's take a look at categories such as paints. In paints, there's likely to be that kind of downtrading. But when you talk in terms of food items, and let's talk about footfalls within the top rung retailer, that is not going to shift from existing brands which they're besotted with, because it's all about saying that I want to buy this pack of cereal and it promises something. I've always bought it, never mind the recession or never mind a slowdown, I'm continuing to buy it because, at least it gratifies, it pacifies me. And, Milind's point on garments is yet another point, which is to say that, hey, listen, yes, there is a slowdown, but I will still look good. I will not make compromises on those brands which I have been buying. The one other point which is affecting us in the market today is the fact that, we are with a huge chunk of the experienced generation, which is to say that I don't want to own, but I want to outsource. So that is also affecting categories such as auto, categories which are higher end categories such as homes, because people are saying, I don't want to own a home. I can buy that home experience closer to my place of work. I don't want to buy a car. I can Uber it or Ola it. So I think, that's yet another thing which we must not ignore. This slowdown is not only about the economy. It is about the psychology and the psychographics of the individual changing and saying, hey, I don't want to own, I will borrow.
Okay. SBI is making a comeback, which is, I'm surprised that SBI has crunched the way it has crunched from 370 to sub 300 when we are looking at, money moving back to corporate banks. So this is one ranked underperformer within the corporate bank. I think markets are unhappy with what they've reported with their numbers, and for 2 quarters now, even though they've been committing NPAs, the NPAs are just not recovering. Mr. Sarwate, which are the 2-3 categories where you think the impact of slowdown would be less and they will continue to remain outliers?
One category which is an evergreen favorite is items of daily consumption which are of low unit price, which have kind of infiltrated into the individual psyche. To put it crudely, if items have entered the Bania list that is sent out every month, or the list which goes to, say, a big basket every month, those items are relatively going to be unaffected. Secondly, deeply penetrated items which are probably having a significant market share in a given category, especially in the rural, I don't think the consumption will change that radically. Another new item, drawing from what Harish was saying, is that while products can be downtraded, experience can rarely be downtraded. So if you have got a certain experience in a certain retail environment, I don't think that is going to be downtraded. So even retail, to a large extent, I feel will escape the downtrading impact. And therefore, I feel products which have created an experience related brand, I think those are likely to be far more stable.
Harish, it's a little puzzling as to how do you explain what's happening with apparel companies. If you look at trends numbers, that's Zara, Westside, etc., or even in Aditya Birla Fashion, I understand that end of season sales may actually perk up the volumes for them. But how is it that they're even bettering their margins? And can they really sustain this kind of a trend?
Well, I think crazily so, it is sustainable because we're talking about two ends of the market in what we typically call the rag trade. One of it is that portion of the rag trade where people are buying stuff which are all about, low price and, and fashion. I think there is an impact. But when you talk about high price and branded fashion sold through the intermediary who's adding value, and the intermediary is this great big retailer that we are talking about. Out there, spending is good. The footfalls within retailers are excellent at this point of time. And once those footfalls come in, the kind of footfalls walking into organized retail and the kind of experience that they're seeking and getting, I think there is no compromise on that kind of a purchase. People are also saying that my ticket size of up to 4,000, 5,000 rupees on a garment is fine. At least it's not as deep in deeper items like auto of any kind. So I think, experience, the service dimension, all this is certainly adding to those margins of these super retailers being protected. And more importantly, margins of the brands that go through organized retail being protected.
All right, gentlemen, appreciate your time. Thank you for joining us. I hope the slowdown what currently is haunting us could surprise us. I'm an internal optimistic. I genuinely feel that with each crisis, there's an opportunity which will get created. Better brands will become better. Smaller players will get marginalized because, that's India for you. With each downturn, with each crisis, something new takes a birth. I mean, this entire e-commerce boom took place after the 2008 financial crisis. The so-called the Swiggies and the delivery apps, they were born when there was extreme pessimism in 2012 and 2013. So I really hope that right now when we're talking about gloom, doom, soon we would be using words like boom and India shining once again.